It's Monday, February 24th. Let's level up. My thesis about the market looking pretty at the highs and ugly on the lows, still holding firm. I took a little heat when the SPY and the Q started making some new highs, but they were incremental new highs and the internals were not confirming. And it was sort of like trying to rally on quicksand. People got very interested in buying for a breakout. And I know from personal conversations with many of you that we kind of talked you off the ledge. Just because you're thirsty doesn't mean you need to drink poison. As far as the ES and the NQ go, I knew when we had that morning rally that it was likely going to lead to a liquidation break because that has been the pattern and traders do what works until it doesn't. And as soon as we lost that 6100-ish double bottom, we came down to our next key level of the 59.94. We have a double bottom, even triple bottom there in the overnight session. If that holds, I think we probably bounce to 60.3750 to 60.5075, and then we'd see. If that clears, we probably go back up to the 6100. Now, if we can't hold the 59.94, the next big level is 59.50 quarter, and then after that, we're looking at down closer to 58.09. Are we back on the $100 table? We lost the 6,100. We came down to the 6,000. If we lose 6,000, are we coming down to 5,900, maybe even 5,800? As far as the Qs go, similar situation. That was doomed as soon as it lost 21,951. We came down and are tagging out some subsequent key levels. Right down here, the 21,365 area is very key. If that can't hold, there is risk down to 20,694 as a 100% type of a retracement. On the upside, if we are able to hold here, the next big resistance level could come in near today's bounce high of day at 21,659.75, and the apples to apples on that in the ES would be 6,048.5. The internals today weren't exactly a disaster on the lows. It was just 1.19 to 1 negative, and in the NASDAQ, 2.48 to 1 negative. But the story has really been in the ticks. We've seen a lot of these ticks with more bodies below the zero line. Qs did see a little bit more skirmishes to the upside, but the tick bodies really weren't confirming. It was a bit more mixed in the Qs, but not all that impressive. I think a lot of that was the rebound in Apple. I think we can keep an eye on the VIX here, though, for our pass, don't pass line. The bears did try to get it over 1936 and were not able to succeed. If the bulls can defend the 1936 and we could take out today's low of day and VIX at 1731, I think the risk is down into the 15s. But as long as that 100 MA-ish area holds, that 1712-ish zone, I think it's still iffy. And if the bears can push it up over the 1936, I think it's just a hop, skip, and a jump into the 22s and 23s. 2308 to 2376 roughly has been range high, assuming we don't get something much stronger. As far as SPY goes, we did have the look above and fail of the 609.07. We did get full articulation lower today. We bounced right off the 61.8 of the range of 596.19. So what now? The bulls will need to hold here. If they cannot hold the 596.19, I think we're coming down to the 50% fib at 592.21 and the 100 MA at 592.72 area. The bears need to defend the 50 MA-ish here. Anything back over 599.03 to 600 starts becoming a little bit too much. And if the bulls can push back up over 601.85, which, by the way, would be the likely target if we do get a rally over that 50 MA. So anything over 599.03, I think gets the 601.85. Why? Because it's fib to fib. And I think the 78.6 then becomes key at the 601.85. It's either we hold the 61.8 here at 596.19 and bounce to the 601.85, or we lose the 61.8 here at 596.19 and come back down to 592.21. Super simple there. As far as Qs go, a little bit more of a nasty routing here. This is also going to hinge a lot on NVIDIA on Wednesday. And the best scenario here for the NVIDIA rebound play is coming down straight into that teeth of those earnings, with bearish sentiment pumping at the max for a Costanza type play. That being said, we're right at the 50% fib here at 519.42. So if that holds, I think we bounce to somewhere between the 50 MA at 523.60 and the 61.8 at 524.08. If that fails, I think we're coming down to the 514.77, which is the 38.2, and likely an overshoot to the 100 MA, wherever that is at the time, currently 511.77. 50% fib held. 50 MA must clear at 523.60 to 524.08. That's, of course, the 61.8, which could be some resistance now on a bounce. If we open up there, I think you got a nice right or right out short with a stop right up above it. anything that presses below the opening 5 or 15-minute low, I think you can accelerate to the downside. This would be a bearish dubstep type of a situation. TLT is starting to get some love, which is very nice for our positioning there. We're, of course, long the 90.95 call spread and short the 85.80 put spread out in January. We're only really looking for a move to 91s, 93s, and maybe even a move up into the 95s. After that, we're Audi 5000. I already had rolled down the 100 strike calls to the 95s because the 100s already was showing a really nice gain, and I wanted to lower my cost of the trade. That being said, we're right on the downtrend here. The next resistance would be 90.62, which is the 100 MA, and likely a move up to 91.29, which is the 38.2 of the range. We're starting to see some pullbacks in some of the bigger name stocks like Palantir, Affirm, and the AppLovin, which has just been total monster. As far as Palantir goes, we did get the 4.236 at 119.34. We actually overshot it to 125.41. We are pulling back now. I could see a scenario where we come back down to 81.86, which is the 2.618 of the range, because we stalled at the 4.236. Could we come down to the 2.618? I would like to be more interested in buying the dip closer to primary trend 71.26. So if you want to do some kind of a put ratio playing for that 70, I'm good with it. I would just be a little bit careful with size here, because if this comes down super hard and super fast, it could get really scary on the way down. I would even like to structure a 1x1x1 type of a put spread overwrite for that type of a play. The problem is there's not a lot of juice here. Even if we were to buy 80, sell 75, and sell the 70, you're still looking at a $1.59 outlay. If you want to do something like sell some upside calls here or call spreads to fund it, maybe above 110, that would make some sense to me. You could reduce the cost of that trade some by selling, let's say, 100, buying 105, or buying 100, selling 110. I do think that the $100 level likely would find some immediate resistance and probably could be some option pinning issues up there, but it isn't that much higher from where we are here. And we are coming from an all-time high. So usually before I do calls, getting the calls involved, I like to see a pullback, a rally to a lower high, and then we get the articulation lower, because there's always buy the dippers off of the all-time high. This might be a trade to sit on and wait a little bit, but I do like that setup. As far as Affirm goes, we're right on the channel low, so this is it. I mean, it's got to hold roughly right here. 61.75 is the 2.6 gap fill. We bounced basically off the 100 MA. I'm cool selling roughly 200 MA puts if you want to go longer dated around that 45 level, because that also lines up with the 61.8 of the range. I'm also good with doing either 1x2 playing for that longer dated, or doing 1x1x1 playing for that also on the downside. AppLovin, I am not really a huge believer in the company, because I do think that they are going to have some competition, which we're starting to see come in, but I do think that the 50 MA and channel low at 363.05 and rising is attractive if we do get down there for a buy the dip situation. At that point, I'd be looking to sell some sub 300 puts. The 50% fib of the range and one breakout level is 292.91, and a little longer dated, the 61.8 of the range is 238.10. Again, this is coming from all-time highs. I will expect it to come down, make at least a lower high before there is some serious danger on the downside. Usually, that's how it works. Sometimes you just do get that full cascade situation if there's news, but barring some type of idiosyncratic news on these stocks, I do think we get that A, B, C type of action first. As far as Bitcoin goes, we've been bullish on Bitcoin, but we were cautious after we had the look above and fail candle on 121. A lot of people thought I was crazy for that, but they're not thinking that today. That being said, we're right on 100 MA support at 88,940, and if we do have a little bit more down, the channel low and the full pennant fill from the pullback after the big rally is 85,890, so down there I am interested in starting to buy the dip if we do get down that low. Also with Ethereum, they could probably line up and time that zone together. The only cryptos I really trade these days are Bitcoin, Ethereum, and Bitcoin Cash. I would sometimes dip into Litecoin, but really not looking to go down in quality that much anymore. And the other ones I just view as pretty much as a joke. I know that's going to be controversial, but I always like trading in the leading issues. As far as gold goes, still beasting up to all-time highs. getting closer to my 2 times range of the negated triple tap head and shoulders up to 279.29. I think if you want to use the 100 MA as a stop, 269.55 and rising is a good one for that. Generally speaking, Februarys tend to be a little bit weak. Sometimes we get strong January, February, Marches. Those tend to be more rare. Usually if January's strong, February's weak, and then we get end of quarter rally into March. So if we could get through February and it's not too ugly, I think that that could present an opportunity. NVIDIA is going to be the big story on Wednesday. It is coming down. It had filled the gap to 142.62. That was, of course, the 124 gap fill, so it is no longer oversold. I would like to see this come down here, make a higher low, and then rally, because we could even have an inverted head and shoulders set up here, but it is near the highs, so it isn't as valid as if we had had a protracted decline. Everyone on TV, including Kramer, seems to think they're going to have disappointing numbers or some type of a shortfall. I'm not so sure about that. I actually think they may have good numbers. But what I'd like to see is for the stock to get panicky ahead of that. Maybe we're down again tomorrow and then maybe even into the earnings. And then I think it could set up for a Costanza situation with a rally higher. If we rally ahead of that, it's a little iffy, and I would need to see a breakout over those 153.13 all-time highs for a gap and go. Always on guard for look above and fails. We'll talk about this a little bit more after the close tomorrow before the Wednesday earnings, and we'll talk about some options plays that I'm looking at for playing it. Like and follow for more.